All right, so good afternoon to our monthly market update. I know I've got a good few tidbits to give you, but I'll go last. Again, on the call with us is Adam Bruner from Flagship Home Loans and Jake Brendel from Goosehead Insurance, our industry experts on mortgages and insurance. And then you guys know me, your Director of Training and Professional Development with legal updates and industry news. So Adam, would you like to talk to us about what mortgage topic you're going to cover today?
Sure, sure. I'm excited about this one. It's a little unconventional, but when Danielle and I were kind of spitballing some ideas, we came up with the topic of talking about side hustles, right? And how they influence or how they affect our approvals, the underwriting process. How can we qualify that income? And by side hustles, what we mean is not their primary job. So we're talking about whether it's mowing grass, whether it's Uber or something like that. When it comes to qualifying, typically those quote unquote side hustles need to have a 2-year history. Okay, they're going to treat it like variable income. They're going to treat it like a part-time job, and you have to show stable income over 2 years, typically speaking. But the real digging that we wanted to do today was talking about how do those side hustles impact the underwriting? How can things go wrong? How can those side hustles negatively impact our pre-approvals? Okay. And what we were hoping for here is for everyone to kind of share if they've had an experience like that. So I'm just going to serve up a few that I've come across recently. And I'll start with the easy one, right? And that is if we have to show tax returns, we can't show partial tax returns. It has to be the complete tax return. So for someone that's W-2'd and salaried, we don't have to show tax returns. For someone that's W-2'd, we don't have to show tax returns. If someone's doing, even if they're 1099, we have programs where we don't have to show tax returns. But once an underwriter sees a tax return, they can't unsee it. They can't pick and choose. So if there's a huge loss, if there is something concerning where it shows that money is owed, the underwriters can't ignore that. So first and foremost, we want to try to make sure that we're going to be submitting a file with W-2s only and no tax returns, no transcripts of tax returns. But it doesn't stop there. I had an interesting one about 2 years ago where the person was a veteran. And that's key to the story is that this was a VA loan. They were a veteran. They were not self-employed. They were W-2'd, and they also had some disability income from the VA. The problem came up about a week before closing. There is a report that has to be run on all government loans called a Cavers report. I have no idea what that acronym stands for. Danielle, if you do, feel free to chime in. But long story short, what the Cavers report is looking for is any federal debt that is owed. So this can be something like a student loan. It can be any myriad of things. And what came up for this particular borrower in the 11th hour, a week before closing, was a PPE. Okay, one of those loans. Am I saying that correctly? It was PPE loans from COVID. Was it PPE?
PPP, PPE, I'm not sure.
PPP, yeah, I forget the acronym, but it was the COVID loan that they had on their business 2 years prior. They had a repayment plan that was structured and they missed a payment. And long story short, it didn't change our loan. We were able to get things back on track, but it did delay our closing by about 2 weeks because it came up on the Cavers report. Now, I'll take full responsibility for that. Did I drill that borrower down and say, have you ever had a loan with that's PPE that's unpaid? I'm not even sure if I would have asked him that question if he would have been able to tell me. Like it was a surprise to him too. So that's one that came up. Obviously, the other one that we don't think about is bank statements. So even if a borrower does not show tax returns, has nothing on the Cavers report. If they have bank statements that show activity from a business or show regular payments going to something that is not on the credit report, an underwriter might see that when they are vetting the assets, when they're sourcing assets. And that could lead to a question of, well, where's that money coming from or where is that money going? And once the borrower says, oh, well, I have a side business and I owed money, the underwriter is going to say, okay, well, we need to dig in a little bit there. Because remember, we don't want to show underwriters any more than they need to see to qualify a file, but when they see something, it could trigger questions. So again, a lot of this is solved by asking the proper questions up front so that we can navigate through the underwriting process and avoid any delays. Those were the big things that I wanted to bring up. So tax returns, the bank statements, CAVR reports. Danielle, any issues or things that you've seen in your
Oh, he froze. You guys still hear me?
Yeah, you're not frozen.
Okay, good. So I'll keep talking then. Anything I've seen, yes. Not sure why Adam froze, but the I had a client one time. She was a police officer, so
oh,
great W-2, solid income. But she also sold LuLaRoe leggings, and she was actually a tax preparer too. So she was like kind of an overachiever, if you will. And she her first year or first couple years in business, she showed a big loss on LuLaRoe. Obviously, they buy a lot of inventory. So her first couple years was a loss. And we never thought, no one, she's like great income. Why would that be a problem? But when they saw, obviously her tax returns, it was an aggregate. The loss came off of her W-2. And again, I'm sure a lot of her loss was again on credit cards. It wasn't money she actually lost, and depreciated assets because she did tax preparing. So a lot of it was also phantom loss, depreciating inventory and things like that. And so, but that was something that we had ran into once we went under contract because she was pre-approved anecdotally with, her information, didn't really dive into the details of other things she was doing because we thought her W-2 income was plenty. And so that became a wrench. We got over it, we find ways around things, we get through things, but it was still a wrench in the works. And so from that experience, and that's why Adam and I talked about it, I had actually created a direct sales or side hustle, basically a seminar years ago. I had done with a prior loan officer because I didn't know Adam at the time, but we had done a couple of seminars where it was like, can your side hustle hurt you? And we basically marketed it to direct sales reps. And they would come, and it was a great way to market your services as an agent and do it with Adam as a loan officer. And there was a lot of bullet points, large cash deposits from after a vendor show where they're doing a lot of cash. That's going to be a red flag. Maintaining high credit card balances because of having to purchase inventory until you, unload that. A lot of direct sales people fail. It's a high fail rate. Business, and so they end up with a lot of high credit card debt and never get it paid off directly from those sales efforts. And so there's a lot of high risk behavior when it comes to thinking about buying a house in the next few years when they're doing those types of side businesses and whether or not they succeed. And so it's a great, everyone does first time home buyer seminars. Everyone's doing those. Those are overdone. Think about other kinds of seminars you can be doing, and we can tailor. I have it already done. I just have to rebrand it for Iron Valley. So if that's something different you want to do as you come into the spring market, these people are sitting ducks at craft shows. Just walk around and grab all their cards. They're sitting out. Like just go along and I mean, it's nicer if you get to know them too. You can stop and talk and chat. How's your day? You're doing a lot of sales. You meet a lot of people, and you could even set up at these shows and advertise your upcoming seminar because the number one customer at a craft show is the other vendors. They walk around and they buy. I've hosted a lot of craft shows. I've hosted a lot of vendor shows. I've put them on. I've been at them. So I know the crowds, but it's just something to think about as another demographic to market to. And by teaming up with Adam, he can really help you with the content and, hitting all those pain points and then how to solve them, how to mitigate them as they're coming into the home buying thought process in their lives. So,
Yeah, that's all good stuff there, Danielle. And you jogged my memory. One other thing that I've had come up recently was someone that they owned a coffee shop. They closed it in Halloween of 2024, and they immediately got a full-time salaried position. So we had solid income, we had no gap of employment, borrower qualified based on the salary, but our underwriters were very, very into asking questions about why they closed the business, what happened, proof that the business was actually closed. And I can only imagine that what they're looking for there is any outstanding debts and actual proof that they really did close the business and were moving on to a new career. Because someone could feasibly say they closed a business. Let's say they have a friend that has a large company that could put them on the books as a salaried employee and qualify very quickly. So underwriters are trained, and they're not trying to be jerks. They're just dotting all their T's, crossing all their or dotting all their T's, crossing their I's, right? They're just making sure that everything's squared away and that nothing's going to come back and bite them in the butt from that old business. And the one thing, I should say, the two things that underwriters love seeing are communications from CPAs and lawyers. If you have a letter from a CPA that says they closed this business, boom, you're done. So whenever we have a situation like that, it's always good to just ask the borrower, are you still in contact with your CPA? Can we get a direct line of communication? Get the authorization, then you can get what you need from the CPAs and lawyers, and underwriters have no issues with it. Just a final thought on that.
Any questions about the side hustles or any clients that you've had like that or? Okay, quiet crowd. All right. Well, if anyone has any interest in those materials or exploring that further, just let Adam or I know and we can hook you up with that. Um, Jake, what would you like to talk to us about today in the insurance world?
Yay, insurance. We
Yay!
have
Exciting.
another super exciting topic for y'all today. In the past, we've beaten you over the head with market conditions and rates and eligibility and guidelines and all that kind of stuff. So another fun topic, flood insurance. Woohoo! Flood insurance, the stepchild of the insurance industry. Some of my realtor friends get a little nervous when it comes to flood insurance. It can not be fun for your deals, but it doesn't have to go that way. So I really just kind of want to give you some tips and just some easy ways to kind of help guide you through flood insurance and how to approach it, right? So from the buying side, I believe most of you will have access to a FEMA map, right? Or you can look it up in FEMA and figure out where the flood zone is or whatever. But I have a lot of relationships with realtors that will also lean on me as a resource for that. So don't be afraid to reach out if that's a scenario that you're just unsure on. Maybe the property line or the flood line is going through the property, right? Or right next door to the property, or at least close where it's putting a little bit of doubt. A quick reach out via text or whatever, and I can tell you generally pretty accurately where that flood line is, as long as they'll show me a lovely picture that will be there and how much that will cost as an estimate for your buyer, right? So that you know before you make an offer on the house where everything will line up. Flood insurance is very similar to the home insurance market for me, where I have probably 4 or 5 different companies to shop flood insurance to try to find the best price for your client and make things work for the deal. A lot of that, though, will be determined on the type of loan, which is a follow-up question that you'll see me ask. Is it VA? Is it conventional? Those types of things that will determine the program that will be accepted by the mortgage lender when we go to write the flood policy. So those are the things that you'll see me kick back to you. But please, please, please don't disqualify a deal just because it's a flood zone. I can't tell you how many times that I've had somebody reach out, get me to run them a quote, and they're like, "Oh, that's not bad," or "That's a lot better than what I thought." Don't get me wrong; it could go the reverse side of that as well. But more times than not, I think it's more reasonable based on the amount of companies that I have to shop. Flood is all about elevation and proximity to water. Those are the rating factors, and really that's it. There's no credit checks or anything that like that from a client standpoint. And speaking on that, elevation certificates I don't want to say they're almost outdated at this point, but they almost are. I mean, technology kind of rules our world. So a lot of times the flood company doesn't need an elevation certificate. They have the technology to determine elevation and able to give you pricing without that. In some scenarios, it can help. In some scenarios, it can do absolutely nothing. And guess what? The only way is to find that out. Is to get an elevation certificate and plug in the information, right? I say that because I've been down that road a few times where somebody has gotten an elevation certificate. We plug it in, and it did absolutely nothing. And you pay a couple $100s, right, to get a flood certificate for nothing. At least on the insurance end, there might be another reason for it, throughout the mortgage process or anyway. If you are on the selling side, same type of deal. I've had plenty of realtors that have reached out. Hey, I'm looking to sell this house. It's in a flood zone. Need an estimate on what it costs for a flood insurance policy, and they'll a lot of times put that information right in the listing, so that way all of your ducks are in a row, right? You have everything hashed out. There's no hiccups down the line, right? If you have somebody that's having trouble on the buyer side finding, a price that will work for the mortgage and everything, everything's all ready to go. Contact information for me to get everybody through the process. So it's really kind of the biggest thing. I didn't want to overcomplicate flood insurance because I can talk to you about flood insurance for hours, really. But it really, at its core, I think, just don't be afraid to reach out there and have everything prepared, ready to go for your buyer or your seller.
And Adam or Jake, can we clarify? I believe what FHA can now use private insurance companies, but VA is still NFIP, the National Flood Insurance Program. Is that correct?
I believe so, yes.
Okay.
Yeah. Yeah, it's been that way for a while actually, but legally anyway. But a lot of mortgage companies now I think are caught up to that and doing that now. So yeah, I haven't had any issues with FHA loans for a little while using private flood insurance.
Good. Excellent. Excellent.
VA is a whole nother animal, so who knows when that'll change, if that'll ever change.
Okay. And for those of you in Pennsylvania, of course, just be careful if you do use a PHFA loan. Flood insurance is almost just dead in the water as far as PHFA and flood zone. I mean, technically, it's not a hard, fast rule that you can't have flood insurance with PHFA, but the way their overlay works, it makes it almost impossible. So avoid flood zone for a PHFA loan.
Jake, I had a question. I recently had a contingency sale where a property in New York had to sell for our loan to close. And at the very last minute, it came up that that property in New York needed flood insurance. And the initial proposed flood insurance was crazy. It was like $4,000 a year. It was going to push our debt ratio over the limit, or it was pushing the buyer's debt ratio over the limit. And long story short, they shopped around and they got a different flood insurance policy, and it worked. Um, is flood insurance just like other insurance, where things like amount of claims or FICO score factor into the coverage?
Not that per se. No, it's all about proximity to water and elevation, right? No credit scores or anything like that. It just depends on the type of loan, right? So in that situation, I'm guessing it was conventional or FHA or something of the sort where they
Even
could
worse,
actually
it was
shop.
an FHA 203K.
Okay, got it. So if that were VA, you'd be stuck, right? Because VA, you have to use the government backed, the federal program, where, conventional or FHA, whatever, you can shop the private flood market, right? Which is no different than, shopping for regular home insurance. It's just finding a company that's going to give you half decent coverage, at a certain price. You can play with deductibles. And then the value for rebuild of the house for most mortgage companies just has to meet the value of the loan, right? So those are the important things too from your side. If you see a flood insurance policy that is way higher than what your loan amount is, that might be an opportunity for you to lower that policy if you're running into a debt to income issue, right? Now, it will depend on the home insurance company, right? Because those policies talk to each other. Some home insurance companies will require that the flood meet the replacement cost value of the home, and those values match. So there might be a reason why it's high, but you can also just switch the home insurance company too, right? To somebody that doesn't have that guideline and then kind of play with everything to make it work from a DTI issue. So hopefully that makes sense.
Awesome. Any questions for flood insurance? Again, if you want to look yourself, I just Google FEMA address search in my Google bar. That brings up a dynamic map. You put in the address, it'll bring up again like a movable map with lines and color shading and the different zones. Zone X is good, right, Jake? And then A or
Yes.
AE is the question mark ones. And then I had one just recently with Jake that he checked for me. It came up like, and actually the sellers did not disclose, it wasn't really a disclosure issue because it came up being a really weird zone. But they had not mentioned a flood zone or flood insurance on the property. I had a buyer. And when I looked at the map, and I forget the name of the road, but it was definitely like watershed or something. And I was like, and there was like a creek, and I was like, it's watery, and I was like, my girl cannot afford any extra dollar a month on anything with this one. And so I looked it up. I thought, because I'm very proactive and I'm not showing a house I can't sell. So I looked it up, and it was like right on the line. I was like, oh, that's really tight. Let me just check with Jake. And so I sent it to Jake. I was like, this looks like it's like right on the line. Like, what's it look like on your end? And we came up with this really weird zone called, was it CX? Was that the zone?
Mhm.
It was this one, and I'd
Yeah.
never heard of it, which is, rare for me because I'm super nerdy. And I'm like, what is this? This is fun. This is new. This is different, and it came up where like it would have been up to the underwriter, like they might require it. It's like, we don't know. It could be chancy. And so I talked to my buyer about it. Turns out she was already on the fence about the size of the house anyway. And she was like, I don't want to risk it. I don't want to get inspections, appraisals, get all the way down this line. And then poof, I need flood insurance. And so just by, doing that due diligence where the seller didn't disclose it, but I looked and I was like, let's just check, and let's just save
Yeah.
everybody aggravation of going to see it, liking it, and then down the road we're in too deep and it's not good. So that's where someone
Yeah.
like Jake comes in handy. So
That's a good call.
Interesting.
Those are always interesting situations. The insurance enthusiasts out there will tell you that every house is in a flood zone, right? It's just a matter of how much it's going to flood. In Central PA, we have tons of little creeks, rivers, and streams that run throughout the area here, and you're just never really sure how bad that particular creek is going to be or whatever. So when I say like you're required for flood insurance, that's a requirement of the mortgage, right? Where the mortgage company will make you. It doesn't mean that you shouldn't, right? Because if you're close, and especially right on that line, CX means you're really close to the flood zone. But I've had plenty of people that have been straight up X, and that actual flood zone is 2 blocks away. Right. And, there's nothing that is stopping that water from coming up to your house, right? If it's a really bad hurricane. So those are conversations, we can have, but it's just important to note that, if it is in a flood zone that it's required by mortgage doesn't necessarily mean that you shouldn't have it.
yeah, always never be afraid to double check as a buyer's agent or a seller's agent. Just because the seller doesn't have it doesn't mean it doesn't require it, or like Jake said, is close or in it. Because if they're not paying it, they may have owned their house cash or have paid their mortgage off 20 years ago. It's not that the seller is being dishonest; they just don't know. Those lines get redrawn all the time. So do your due diligence both on the seller and the buyer side. Check the map. My ex, I sold him a house and it was in Mount Holly Springs. My bad for not knowing what springs meant because I was like, there's no creek anywhere nearby. What are we talking about? The seller, they had no in the multi-list for flood zone, so we thought we were fine. It was one of those PHFA loans, so our whole deal blew up. I mean, we saved it, we got it back together because he had to go. But we got it together. But But we found out that it was flood zone midway, but the seller didn't disclose it. And it turns out that Mount Holly Springs is named for a reason because there's a lot of water under the ground, but I didn't know. I should have known, but I didn't. So doing it's like 2 seconds on an internet website to check flood zones. So doing that due diligence on buyers and sellers is smart. Julie, did you have a question you unmuted or?
Oh no, I was just listening along.
Okay, sorry. When you unmuted, I
No,
thought.
it's okay. I didn't know you could see that. Hello.
Hi. Yes, I see
I
it.
have had some of this pop up though. One time I had a house way up on a hill we were trying to buy. I guess there was a little creek nearby. The seller had long paid off their mortgage. Lines were redrawn. It was a flood zone. Like just the little corner of the house was in it. It was kind of a mess, but they ended up getting a Loma and everything turned out okay. But yeah, we had the elevation cert, all kinds of stuff was going on out there.
Yep. And for those on the call, LOMA means letter of map amendment. So it's part of the process of getting that redrawn and getting them out of the flood zone. So thank you for bringing that up, Jillian. And yeah, so like I said, it's not that sellers are being dishonest. They just don't, they only know what they know. And if things have changed since they had to have it, then they just don't know.
Mm-hmm.
Awesome. Excellent. Well, thanks for sharing, Jake. Flood zone is definitely an issue, at least where we're at here in Central PA. For other people in other areas, I'm sure have lots of water as well, up and down the East Coast for sure. So, all right. So if there's no more flood zone questions, I have got some updates. Nothing major, or at least nothing in depth, I would say. For tax time, because we are at tax time, the meal deduction has changed. For a couple years there, we were allowed to take 100% of our meals. Now we can only take 50% of our meals. So if you're doing your own taxes, it's only 50% this time. And mileage is at 67 cents per year, or per mile this year. So those are just a few tax things to keep in mind when you're doing your taxes. Also, sad news, fair housing update. We have lost our protections for gender identity and sexual orientation. Those were put into federal protection in 2021, but those have been repealed. So that is sad news. But just as a reminder, as members of the Association of Realtors, those categories are still protected under our Code of Ethics. So as a Realtor, we are still protecting those classes, but at the federal level, of course, those protections are not part of that anymore at the moment. So
that's a good point. Just to second that, Danielle, HMDA laws have not changed. HMDA reporting has not changed on the mortgage applications. So that is still reported and tracked
okay, good.
On our side of things as well.
Yeah, I mean, CFPB, of course, is on hold right now, which is unfortunate. Because, we do a lot of, the fair housing. There's actually been tons of cases of redlining and unfair and unequal treatment in banking. There's been a lot of large banks held accountable for disparate treatment. So those are presumably on hold at the moment. So again, bad news, but those of us on the call, I'm sure Jake included, of course, we're going to be still treating everybody equitably and fairly and wonderfully going forward, but we are still held to our Code of Ethics. So as of right now, that has not changed. So that's the good news, is we are still going to uphold that standard. Other news, the do not call law that was going to go into effect in January, updating how we obtain consent for do not call, for telephone solicitation and robocalls has been postponed until January 26th of 2026. So basically next year. So all the do not call laws are still in effect, are the same as they have been. Just keep in mind can spam, things like that. There was a realtor who was fined for her email not having a proper opt-out option. So that is enforceable against just small emails. Any kind of solicitation needs to have an opt-out option. There's actually a list of rules for can spam. I was actually surprised when I looked at, I'm familiar with can spam. I teach about it almost, every couple of weeks classes. And I was surprised at the list when I looked at it. A physical address in your email is actually required. So if you don't have like a signature line, like a proper signature with your like office address, that's actually a violation of can spam. I was surprised by that. I didn't know that off the top of my head. Obviously, your headers have to be accurate. Things have to look like what they are and not be misleading and things like that. But an opt-out option and a physical address were, I mean, I knew the opt-out option, but a physical address, I didn't realize that was necessary. So just keep that in mind when you're sending out your emails. I thought this was interesting. New Mexico, in New Mexico, there's an MLS that is now requiring every listing to have a floor plan.
Mm,
I know. I thought that was very interesting just to see again where things go.
I would like that.
Yeah, I mean, there's some houses that are pretty obvious. So
Sure.
I do them strategically. Like if I think it's confusing inside, I do a floor plan. Obvious, then I don't. But I thought it was an interesting move. And again, watching the West Coast is always important because it comes West Coast to East Coast. Things come here last because we're old-fashioned and don't like change.
Sounds right.
Yeah, right. So anyway, so I thought that was an interesting news article that I saw that they're making floor plans required. So could be interesting to see if that takes off in other parts of the country and where that goes. And then my last tidbit, just be aware, and we're probably going to do a bigger webinar on this later in the year or later in the spring. There's a lot of vacant land scams going on. Our state association has had a record number of calls about this, and I've actually heard of several stories about this directly from folks. So folks calling up to list vacant land. So they are remote to you, they are in a hurry. They are getting more sophisticated. They're able to manufacture like fake IDs to show you pictures of things like that. So there are, obviously red flags. Sometimes they'll say they're sick. Cancer seems to be one of the like trigger things they use. It's like, oh, I've got cancer and I want to sell fast. They will be reluctant to, video chat or meet in any way. They'll just be very, again, urgent, in a hurry, and not want to show a lot of proof of identity. And so just be very, 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 very careful. Some people have gotten as far as, too late, obviously, or to the closing table till they figured it out that it was a scam. My biggest recommendation is reverse engineer it, work backwards. Act as if you're trying to find the owner of that piece of land and find them. And you'll probably find not the person who's calling you. You'll find somebody else. Ask neighbors. They probably have contact information for that landowner for keeping an eye on it. Things like that. Talk to an attorney. Attorneys actually have behind the scenes software that they have subscriptions to find people, and their phone numbers, their email addresses, things like that. So talk to your title company. Or whatever attorney, backs them, and see if they can find that owner and then reach out to them directly and see if they've called you to list that property. So be very, very aware of those vacant land scams. Again, people are getting very good at what they do to take advantage of people. So try not to be part of one of those. And again, a lot of the agents are doing this, again, they're doing a ton of due diligence and still it's a scam. So it's not that the agents are even being derelict in their duties. They're just really good at this. So we have to be better than them. So be aware of that. It's going around. Any questions?
I don't think.
Okay. Excellent. Well, if there's anything you'd like us to cover in the future webinars, feel free to send that over to me or Lisa. I know some of you have Lisa's information as well. But let us know, and we're happy to cover those on our monthly webinars. Mark your calendars. I think, what is this? Whatever Tuesday of the month this is, it's that same Tuesday every month. So you can mark your calendars at this time and day. And
Third Tuesday at 2.
there you go. Third Tuesday at 2. I'm like, I don't know what day it is. I have a cold. I'm confused. So, it happens to the best of us. So, and if you haven't registered for Elevate on March 8th, do that so we can see you there as well. Okay. All right. Well, thanks everyone for joining us, and we'll get this recording out and saved, and we'll see you next month.
Thank you,
Thanks,
Danielle.
guys.
Thank you, everybody.
Thanks, y'all. See ya.
Bye.
Thank you.